Hey everyone, welcome to my channel. I'm Doris. I'm here to show you about my stock account update and today's market. Today my stock account has earned 1,600 US dollars. A mixed market awaits inflation data and earnings. The surging US tech stocks is about to be tested by a tough earnings season. So let's take a look at my account. Right now, including the post-market price, I've made a total gain of 2.25%. Right now, the net asset of my account is $73,224.75. Today, the UNG made a gain of 6.86%, rising to $6.85. It's a gain. In the post-market, it rose further to 6.92% at $6.92. It shows a gain in the natural gas, and the Unity software made a loss of 1.48% to $30.67. In the market today, market closed mixed. Dow Jones Industrial Average closed with a gain of 0.3%. Nasdaq closed with a loss of 0.03%, and S&P 500 made a gain of 0.10%. Internet content and the consumer electronics, the tech industries closed down with more than 1.5%. On the other hand, most of the industries, especially the energy and oil and gas, closed with a gain of more than 1%. Wall Street closed mixed on Monday. Traders generally believe that non-farm payrolls data at the weekend will prompt the Fed to continue raising interest rates by at least a quarter basis point at its May meeting. This week, investors focus on an important CPI and PPI inflation data, as well as earnings from several large banks. This week includes busy economic data, including the latest consumer prices, CPI, and producer price index data, due to Wednesday and Thursday respectively. This data will determine whether the Fed will pause or end its rate hike activity, and if so, when it will begin. AXS investment corporate analyst Greg Basok said, "We see the same investor narrative that uncertainty around the mixed economic data drives uncertainty over the Fed policy and raises greater concerns that the Fed could again push ahead with another rate hike, especially after a strong jobs data on Friday." He said, "I think investors are increasingly worried about a potential recession in the U.S. With the Fed decision looming, markets appear to be under even more pressure." U.S. stocks were closed on Friday for Good Friday. Thus, U.S. non-farm payrolls data for March showed the resilience and the moderate inflation of the U.S. economy. U.S. stock investors only had a chance to reach the data on Monday. The Labor Department reported Friday that non-farm payrolls rose 236,000 in March, with economists surveyed by Dow Jones expecting an average of 238,000. The unemployment rate fell to 3.5%, and the market expects it to remain at 3.6%. Economic data released on Monday shows the Conference Board Employment Trade Index came in at 116.24 in March, up from 118.29 last month. U.S. wholesale inventories rose 0.1% month-on-month in February versus 0.2% expected, 0.2% last. Private Wealth's Jason Pride, Chief Investment Officer of the institution, said the data confirmed expectations that the U.S. was experiencing experiencing a slow recession, but it did not indicate that the inflation problem will be solved immediately. So the chances of a quarter-point rate hike in May should be higher because the data do not seem to justify the Fed's pause. The probability of a 25 basis point rate hike in May has risen to 68.7%. According to CME's Fed observation tool on Monday, the Fed's rate swap showed the Federal Open Market Committee with a more than 80% chance of a 25 basis point rate hike in May. Investors will also get their first corporate earnings report this week. Tilray Brands will report its results on Monday. Big banks like JP Morgan, Wells Fargo, and Citigroup will report on Friday. MLIV posts the latest survey of individual and institutional investors, shows that most investors believe the first quarter's earnings season will be a dismal and frustrating one. Analysts also forecast the biggest decline since at least 2006. The surging U.S. tech stocks is about to be tested by a tough earnings season. The latest survey found out that the promising earnings season follows a year-to-date 20% rally into U.S. tech stocks falling out of touch. Despite the recent banking turmoil in the market, investors are flocking to tech stocks, but analysts forecast the biggest quarterly profit decline in at least 2006, making the rotation more incompatible. Of the 367 people surveyed by Bloomberg, nearly 60% said the rebound was unrelated to earnings or expectations. On the other hand, 41% of respondents believe the big banks' profit to be hit hard by the industry turmoil. Tech stocks are outperforming a bit too far, and we're not chasing it anyway, Willie, global chief investment strategist at BlackRock, said in an interview in London. It's driving the recession becoming apparent and giving rise to the expectation that the Fed will start cutting rates, not necessarily corporate fundamentals. After the collapse of Silicon Valley Bank, opinions about the policy and market direction. On the other hand, as fears of a recession are growing, there is also optimism that the Fed will be forced to stop raising interest rates, even if the Fed is struggling to fight stubborn inflation. Earnings season is the next big catalyst for investors who have been working tirelessly looking for market clues from economic data and the Fed statement. 60% of respondents said earnings would drag the S&P 500 lower, while analysts estimate first quarter earnings down 8%, according to data compiled by Bloomberg Industry Research. More broadly, there is still room for the impact of inflation and rising costs to hit margins, and that will fail this earnings quarter, said BlackRock's Lee. Significant technology stocks. What Test Paper's technology stocks handover is crucial to the market as a whole, and S&P's 570% gain in the first quarter became largely from a handful of industry giants. Analysts believe U.S. tech stocks companies will plummet 15% in the 3 months to March, hitting by high costs and slowing demand. The signs look bad. A massive layoff in the industry already heralded a slowdown. The company, which trades more like growth or tech stocks, fell this month after a slight increase in car deliveries last quarter disappointed investors. About 50% of S&P 500 companies have issued first quarter guidance of recent weeks, with a 3-to-1 ratio, said Anika Gupta, head of Wisdom Tree UK Limited. Tech stocks also look pretty expensive. The Nasdaq 100 trades at 24 times forward, well above its long-term average of 19 and 18 times average of the S&P 500. More than a quarter of Bloomberg respondents expect earnings to dampen tech stocks. Only 14% expects to rise further. Banking storm. Tech shares before the income, namely the bank shares lost. One of the focus for investors during the earnings season will be any impact from the recent collapse of some regional U.S. banks. About 41% of respondents surveyed by the MLIV polls expect the turmoil to hit profitability of the big banks, while 31% saw no spillover effects. The first to be tested to be JP Morgan Chase and Citigroup, which report earnings on April 14th. Analysts still expect the financial sector to post 4.2% profit growth in the first quarter, according to data compiled by Bloomberg. Horizon Investments Senior Portfolio Manager Ron Zama said, "As we now know, coupled with liquidity rather than credit problems that caused recent banking events, so we don't think there will be a a bigger impact on the big banks. A third of the MLIV post-survey respondents said the biggest negative factor in the quarter will be a further tightening of financial conditions. An economic slowdown and high inflation are seen as the second biggest risk. While some recent data show that an easing in price pressures, market strategists, including Morgan Stanley's Michael Wilson, caution margin expectations remain too high. Overall, about 56% respondents expect treasuries to outperform stocks in the coming months. AXS investment CEO Greg Vizog said, "The upcoming earnings season may show investors as higher prices, the growing possibility of a recession, and the difficulty of financing in the banking sector will be put on heavy pressure on the market." This survey, 65% of the respondents were professional investors, and 35% were retail investors. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.